Welcome to ForexTV.com. Today is Monday, June 23rd. I'm Remy Hookey for your New York Forex Market Buzz. As we start off the week, the U.S. dollar is higher against the euro, yen, as well as sterling. Focus will be on Wednesday's Fed decision and the statement after the announcement. And now taking a quick look at the latest headlines from the CEP News Desk. U.S. equity markets turned negative after oil rebounded. A barrel of crude on the NYMEX hit a session high of $137.50 a barrel. Meanwhile, the Canadian and American currencies are both stronger following downtrodden economic data out of Europe and the UK. The North American session has been quiet in terms of economic data, and investors are focusing on Wednesday's Fed Reserve rate decision. Overseas, the Euro-zone Manufacturing Purchasing Managers Index fell into contraction territory at 49.1 in June against economists' expectations of a 50.2 reading. Germany's IFO Institute for Economic Research reported that its business climate indicator fell to 101.3 in June against expectations for a reading of 102.5. And UK's property website Rightmove said the country's house prices fell 1.2% in month-over-month terms for the month of June. This afternoon, I'm joined by George Davis, Chief Technical Analyst at RBC Capital Markets. Good afternoon, George.
Good afternoon, Remy.
Happy Monday, and thanks for joining us today.
Pleasure to be here.
Well, as we kick off the week, we're seeing the euro pull back against the U.S. dollar. The decline in the German IFO index and also the preliminary PMI contraction both are pointing to weakness in the Eurozone economy. But while euro-dollar is expected to stay range-bound ahead of the Fed statement on Wednesday, we're beginning to see rising energy costs posing a challenge to the Eurozone economy. So technically, if you could give us your outlook for both the Fed and the ECB and your near-term technical forecast for euro-dollar.
Yeah, in terms of the outlook for the central bank meetings this week, obviously there are going to be important focal points for the market. We do expect the FOMC to leave interest rates unchanged at 2% on Wednesday. Again, basically backing up the latest rhetoric that's come out from a number of Fed officials, basically indicating that they're starting to pay a little bit more attention to the inflation aspect of the economy at this juncture. And as a result of that, that's starting to become a little bit more important relative to the overall economic outlook. Now, as we look in terms of the European central banks, I think the bias right now is still towards a 25 basis point rate hike from the ECB. But it looks like, given the rhetoric that's come out of late, what we might actually see is a one and done type of philosophy where we get one 25 basis point rate hike, and then the ECB basically signals to the market that that's going to be it for the time being. So that's the general outlook for the central banks. And in terms of the currency markets, as you mentioned, the euro is under pressure today after the release of the IFO data and the PMI data. And I think we're likely to see a little bit more drift to the downside. And the key support level right now for the euro is at 153.44. And resistance coming in right now at 157.87. And I think as we move into Wednesday's FOMC announcement, I wouldn't be surprised if we move towards the 154.25 area.
Well, George, while we're still on the euro, if we could also take a look at the UK pound, given broader strength for the dollar cable is lower against the US currency. But fundamentally, we had the Rightmove UK house prices data come out, which printed a further decline of 1.2%. And cable has been seeing short-term strength in recent sessions. So, George, what is your strategy for the UK currency against both the US dollar as well as the euro and your levels in the near term?
I think the strategy for the sterling is similar to that for the euro in the sense that I think at least technically the bias is still to look to sell into rallies. I think of note over the last little while we've seen sterling basically fail to sustain breaks above the 198 to 2 level on the top side. So I think the preferred strategy is to fade rallies up towards those levels as well. And as you mentioned, we're now starting to see evidence of a slowdown in the European economy. We have, over the last month and a half, started to see similar evidence of a slowdown in the UK economy. So it does look like the global economic slowdown is finally starting to reach the UK and Europe in a more pronounced way. So that could potentially put some downside pressures on those currencies. In terms of important support and resistance levels right now, we have resistance that comes in at 197.86 for the pound I think moves up towards that area will be viewed as a selling opportunity, and initial support comes in below the market at 195.44. And again, I wouldn't be surprised if we drift down towards the 195.50 area ahead of Wednesday's announcement from the Fed.
Well, now that we've covered euro and sterling, let's move on to the Japanese yen. On the data front from Japan, we will get CPI at the end of the week and the Tankan coming out early next week. Now, meanwhile, given the divergence in carry trades and U.S. equities, first, what is your outlook for dollar yen? And while we're at it, your short-term forecast for euro against the yen?
Yeah, in terms of the outlook for dollar yen, we have seen the rally stall up against resistance at 108.58. So we have formed a double top up there in technical terms. But I still think, given the overall U.S. dollar strength that we're expecting against the major currencies, that the preferred strategy right now is to continue to buy dollar yen on dips. We do have support coming in around the 105.90 level. So I think as we approach, I would say the 106 to 106.50 area, that would be a zone to consider to start accumulating long dollar yen positions, looking for a retest of that 108.58 resistance area. And in terms of euro yen right now, a lot of that is going to be affected by the market's attitude towards risk aversion. And I think right now in the current environment, equity markets still feel a little bit vulnerable to the downside. We're seeing continued uncertainty in the financial stocks, more downgrading of companies and bond insurers. And I think in that type of environment, given the fact that equities have failed to break above their 200-day moving averages, we're likely to see risk aversion remain elevated, and that would point towards some downside risks for the euro-yen cross. Now, we have resistance that comes in at 168.94. I think moves to that level will attract some selling interest this week, and I think we'll see prices drift down towards support that comes in at 164.96.
Okay, George, very quickly moving on to the commodity currencies, let's start out with the Aussie. Aussie dollar is consolidating against the U.S. currency and trading within Friday's range. So going forward, what is your near-term forecast for the Aussie against the U.S. currency as well as the yen?
Near-term forecast for the Aussie is still in bullish territory. We are in a short to medium-term uptrend there. So I do think support around the 93.86 level will form a base for the Australian dollar, and I think we'll see prices attempt to rally up to resistance at 96.52 this week. And in terms of Aussie yen right now, we have support that comes in at 101.79. I think that area will attract some buying interest for a move up towards resistance at 103.54.
Okay, and last but not least, let's take a quick look at the Canadian dollar. Dollar CAD is another pair that remains range-bound. And after the setbacks off of 103, fundamentally, what are the drivers and technically your levels for dollar CAD?
Well, in terms of the drivers for dollar CAD now, I think the market's still focused on commodity prices as one of the primary drivers, and certainly as well what's happening with broader trends in the U.S. dollar as well as equity markets. And I think when we sort of weigh all of those variables, I mean, the elevated level of commodity prices is a positive for the Canadian dollar, but the downward pressure that we're seeing in equity markets is a negative, and the broader-based U.S. dollar strength that we're seeing is a negative. So, I do think we are consolidating, and the technical profile is rather neutral right now, but I do think that if we do see pullbacks towards support that comes in between 99.50 and 101, we're likely to see some buying interest enter into the market there. And I think eventually we'll have another attempt to move up towards resistance at 102.60.
Okay, George, thank you very much for joining us this afternoon, and thank you very much for insight into the Forex marketplace.
My pleasure.
This has been your Forex Market Buzz with George Davis from RBC Capital Markets. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.